Hello, and welcome to our first LinkedIn Live of the year. My name is Marilyn Wagner, and I am the Chief Experience Officer. Today, we're going to talk about the housing market. What is working? What's happening? Over the past 5 years, it's been primarily a seller's market. Is the tide changing? Let's find out when Andre Perez from Compass Group, one of our exclusive partners, talks to you about the real estate market. A couple of housekeeping items. If you do have any questions, please make sure you put them in the comment section. We will be sure to take them at the end of the event. Additionally, this is recorded, so you can watch it right after to make sure you get the data that you need to make informed decisions. We also want to let you know that we know you. We know who our membership is. We know the challenges that you face when you come to the United States and you're in the real estate market. So know that we speak three languages: English, Spanish, Portuguese, and we know what you're going through as you go throughout your journey. Now, I would be remiss if I didn't do a little bit of shameless promotion, but we are having our 0.25% boost on any new money that you bring into the credit union. So bring the money in, you get a 0.25% boost on the rate, and you get to have your money in a safe, secure location. So we are happy now to present Andre Perez, who will take you through the status of the real estate market. Andre, welcome.
Thank you, Marilyn. Appreciate it. And Marco and the entire credit union, thank you for the kind invite. The name of my portion of the presentation is Real Estate Market and the Trends for the second half of 2025. So there are four questions that I would love to discuss with you all today. One of the most important questions that every client, that every future client asks me is, Andre, what is going to happen with the real estate market? Should I purchase? Should I sell my house in 2025? Or should I wait for next year, maybe 2026, 2027, to make a move? And today we're going to discuss all of that. And for that, I prepared this presentation for you. We're going to clarify what are the current national trends for that is shaping the real estate market for 2025. Are we transitioning into a buyer's market? Remember, we have been, as Marilyn mentioned today, we have been in a seller's market for a while, something that is being creating a lot of friction for all of those buyers who are in the fence in buying or not because of rates, because of the cost of acquiring a property. We're also going to discuss if there is some type of real estate correction in our horizon. And finally, how will interest rates will influence the market for the upcoming months, or at least for the next 2 quarters. With that being said, let me introduce myself. My name is Andre Perez. I've been selling real estate for nearly 27 years. It's a little while. I work with Compass, the #1 brokerage in the nation, and also #1 brokerage here in the Washington metropolitan area. And I lead a team of about 6 agents that are here to serve you in all your real estate needs. My team name is District Partners Real Estate. So without further introduction, I want to make sure that you know that we are here to keep you informed. Whether you have a question related to the real estate market, the interest rate, how the city is doing, please feel free to reach out. I make my priority to stay informed so I can pass all of that information to you. Keep in mind that the markets are dynamic. Every market is different and always evolving, always changing. There are things that are affecting our local market. There are completely different set of circumstances for the other coast or for cities like Miami, New York, etc. And then I also want to let you know that there are different situations like what's going on with the local market, the federal layoffs that are somehow influencing our local market. Today, we will explore the housing market and the insights. And for that, we first going to discuss the challenge. So what has been the challenge for us over the past few years? Since the pandemic, the #1 challenge affecting our market has been what? Lack of inventory, correct? There are no homes in the market. Nobody wants to sell. That has been the common denominator. And of course, that has been the bottleneck. Now, in recent years, in the past 2 to 3 years, interest rates came to play. We went from being in the low threes, high twos, all the way to 7%. And that, of course, created a lot of friction for many because interest rates translate into monthly payments, right? And the purchase power for many went down. So interest rates had been playing a negative role for about 3 years. Now, many homeowners also are unwilling to sell because they have amazing interest rates holding all those assets, correct? You have the home seller who is perhaps ready to sell and transition into a different type of housing, but they don't want to let go because they have 2.75%, 3.25%. And why would you let go at 3.25% to go and purchase another house with a 7%? It doesn't make much sense, right? Also, because at the same time, the cost of construction went up. You call contractor today, you go to Home Depot, purchase a 2x4, it's going to cost almost twice as it was before the pandemic. So the cost of construction went up, and for people to purchase new homes or build a new home, it's going to cost a fortune. So therefore, when we put all of these factors together, that becomes the bottleneck that continues to drive the market. Lack of inventory creates more expensive prices, right? The cost of housing is just different than what it was a couple of years ago. Now, oops. So that's the trend. I'm sorry, that's the challenge. Let's talk about the trend. Not everything is bad news. I have a lot of good news for all of you, particularly if you are considering purchasing a house. So home sales are finally picking up after a very slow start in 2025. And what I mean with that is that pending sales have been rising for 8, with this week is 9 consecutive weeks. And we haven't had that for many, many years. So if pending sales are going up, that means that people are doing more and more transactions. And that's perhaps because sellers are finally letting go, right? Nationwide, there are over 27%, and that's significant, 27% more homes on the market than this time last year. So if there were 1,000 homes for sale, last year, now we have a 27% more of that. So an additional 270 homes in the market. That's significant. Then we have more. We continue to have a lack of new listings. So we don't have as many new listings, but there are more options out there because properties are not necessarily selling the way they used to. Like properties used to come to market and sell within a day or two in a multiple offer situation. That doesn't mean that that's not the case anymore, but it's not as common as it was. And then the nationwide prices are not necessarily going up and up. We have had increases in some areas up to 8%, 10% in a single year. And that, of course, is not healthy for anyone. So since last year, we only went up and these are nationwide statistics, only about 1%. That's good. And a lot of people haven't really noticed a major increase. Now, remember what I said before. Every area is different. Every market is different, right? You go to Virginia and want to purchase a single family home, well, those are in high demand. But you are in DC and want to purchase a condo, you might see a small decrease on value for those type of properties. Now, this is a very important bullet here. Over 41% of the listings in the market are taking price cuts, meaning there are a lot of price reductions out there because sellers are very optimistic about their pricing, but then they're facing a reality and they have no choice but to adjust their pricing. And that is the only way a seller can sell in today's market. Listing preparation, making the properties beautiful, and then pricing their properties right. Those properties that are not following this trend are the ones that are sitting on the market for a while and will eventually pay the price. Now, buyers are doing their homework. They're more aware, more prepared, more demanding, less forgiving, and that is good for everyone, particularly if you're in the market to purchase. Now, the median price, as you can see here in the nation, is 375. This line right here. When we compare the 2024 purple line to the 2025, we can see that this has flattened, and there is indication that it will continue that way. So I wouldn't be surprised if by the end of the year, values of 2024 are exactly at par with 2025. Some call it plateau. Yeah, I would say we're going to normalize the market. And we are all doing that because supply, demand, interest rates. Now, pending sales have been rising for 8 consecutive weeks. The year begins slow. According to Mortgage Bankers Association, we have more mortgage applications than last year. And that's good, meaning people are applying for mortgages. If interest rates drop, and this is important, and Marco will probably talk about that, we go from the nearly 7% rate for 30-year fix down to 6%, I expect interest to spike. And that could change the market again. A lot of people are in a holding pattern. And I think that if rates go just down to 6% or slightly under 6% for 30-year mortgages, I think they're going to take a spread. So if you want to buy, maybe 2026 is your year, okay? And I'm almost done. Inventory. If we compare inventory this year, this is 2025, and we compare this with 2024, you can see that there is more inventory. And the orange line represents inventory before the pandemic. So as you can tell, we are getting very, very close to the inventory before the pandemic started. So we have about 28% more inventory than last year for single family dwellings. That doesn't include condos. Lastly, there are more, so just a quick reminder, there are 27% more unsold homes this year than last year. Nearly 42% of the properties on the market are experiencing price cuts, and pending sales are in the rise. So all of those indicators are very exciting for home buyers because now they're going to have more access to purchase real estate, to get concessions for their closing costs, to have allowance for their due diligence, like home inspections, appraisal contingencies, financing contingencies, something that buyers had to waive in the past in order to have access to purchasing a property. And Marco, I believe you will concur with me that if rates get closer to 6% in the 30-year product, I think we're going to have another booming market, in the upcoming years.
That's right.
Okay. I'm going to pass now the mic to Marco, and then we're going to have a discussion where we're going to welcome all your questions. All right? Thank you.
Thank you, Rose. Thank you, everybody, for being here. So I'm just going to talk about how the credit union can help you, to achieve, the purchase of a new property, a primary residence, or an investment property. Why to work with the credit union? So basically, we're designed for your life and your mission as the IDB employees or family members. We exclusively work for the IDB staff, retirees, and family members. We're bilingual, so todos hablamos español acá, and un poquito de portugués. We also understand the G4 visas, obviously U.S. citizens and green card holders. We know about the overseas income. So if you are buying from the country office, we know how to work with the local currency to make happen the purchase of a property here in the United States. And also the assets that need to be used in order to purchase a property if you have the assets overseas. Transparency, basically we do have all our rates in the website. You're going to see that, our fees as well. We do closings within 30 days or less. and you have direct relationship with the decision makers. Basically, if we say that we can do the loan, we will close that loan. So I'm the CLO, and you can stop by and talk to me if you have any type of situation or case, and we will work with you guys to make those loans happen. What if you could bring your low rate with you? So everybody is just thinking about, if let's say that you bought a property and right now you have a 2.5% rate, right? And you are thinking about buying a new house, but you don't want to let go that 2.5%, and you are holding back because that's an awesome rate. No, so we're not gonna see that rate, for a while. But the credit union designed a new product which is called the blended rate mortgage. So we combine your current interest rate, let's say that it was at 3%, okay, and if the interest rate on the 5-1 arm that we are currently offering is a 5.5%, we're going to combine those two rates, okay, and we're going to give you a blended rate, so which is going to be around 4.5%. So we are shaving approximately 1% of the interest rate that we currently offer for anybody that doesn't have a mortgage with a credit union. So this program is for anybody that already has a mortgage with the credit union. So we're gonna provide you this scenario basically, and you're gonna be able to reduce the interest rate still and be able to buy a new property. What happens if you don't want to sell the property? Is still you want to use the equity of the property? We can do a cash out and use the same scenario, and you're gonna use the equity of the property and buy the property and put that extra money or that equity of the property on the purchase of the new home. So it's an origination fee of 1% plus the lock-in fee, but basically this is a new program that we created specifically for the portfolio and the members of the credit union. Mortgage products. So if you're buying a primary residence, we offer between the fixed rate 10, 15, and 20 or 30 years fixed. We offer the 5, 7, and 10 1-arms programs amortized to 30 years. 5-1 means that the interest rate is fixed for the initial 5 years, and after that will reset on yearly basis. The one is on yearly basis. So if you're looking to buy an investment property or a second home, we also can serve you. So if you're looking for a seasonal or vacation home, so we can offer you the 5-1, 7-1, 10 and 1 arms amortized on 30 years, and we'll have a balloon 15 years. Basically, the balloon is if you pass the 5 years or the 10 years, for example, and you want to keep the property for a while, so that give you on the year 15, you will need to refinance or repay the loan at that time. Normally, when it's the reset of the loan on the 5 years, 7 or 10, normally we refinance those products immediately or before if the rates go down. We know really well the G4 visas, U.S. citizen green card holders. If you don't have any credit, let's say that you just arrived to the country, but you have the assets, that you save, in your country, we can help you. So we're going to require a minimum of 20% down. If the income is from country offices, for example, if you live in Peru and you are making income in soles, but you want to purchase a property in Florida, we're going to be able to convert that to US dollars and qualify you based on your current income in soles, but we will give you the capability of the purchase capabilities that you have with the credit union. So we manage all those scenarios, and we have also a supplemental housing loan. If you're a staff of the credit union, staff of the bank, you have the termination benefits. So the termination benefits, you can use those termination benefits in order to have a supplemental housing loan up to $40,000. So that can help you to offset or to pay the closing costs or to use that towards the down payment. So if you say, okay, well, let's say that I'm buying a property of $500,000, a condo, but I have around $80,000, but I have my termination benefits. I don't use it now. I'm going to hold because I still, I don't have the 20% down, and I want to put 20% down to avoid the mortgage insurance premium. So you can use the supplemental housing with your termination benefits to offset that difference. You're gonna get the $40,000 plus the 80,000 that you had already. You're 120. You pay for the down payment plus the closing costs. So that's a scenario that you should use. This is a benefit if you are on staff of the IDB. Home equities. If you already have a property and you have equity on the property, we offer home equities for primary residence and investment properties. So we have a current promotion of a discount of up to 1% of the interest rate. So we are as low as 6.25 based on the LTV. So if you're in 50% LTV, you're going to be in 6.5. If you are at 80% LTV and you want to keep or take the maximum equity of the property, you're going to be around 6.75. And this promotion ends at the end of September 30th. So stop by and ask any of the loan officers to see if you are interested to get a home equity line of credit. This is a line of credit based on your property. It's a second line, or if you don't have any mortgage, it can be a first lien as well. The first 10 years is interest only, so you're going to pay interest only through the life. This is like a big credit card. So you pay as you use it. No, so if you get $100,000 and you only draw $50,000, you're gonna pay interest over the $50,000. And if you repay $20,000, you're gonna be paying interest over the $30,000. So this is an adjustable rate mortgage. It's index of the 26-week T-bill plus margin, and this product adjusts annually. Normally on the market, adjusts on quarterly basis or monthly. It depends on the product, but our product adjusts on annually basis. And we offer this for properties in DC, Maryland, and Virginia only. Primary residence and investment properties, we can go up to 80% LTV. And we are waiving the origination fee, which is $175, pretty much nothing, if you apply until August 15. And this is no annual maintenance or any other closing fees. We also specialize in you. We tailor our products for you. So right now we are offering up to 95% financing with mortgage insurance. If you are new to the country and you have some assets, but you don't want to use everything that you have, we can go up to with a minimum of 5% down. Okay, plus your closing costs. Your closing costs normally in a transaction on a purchase is around 3% of the purchase price. So you need to have at least 8%. So, and you can use actually a supplemental housing loan too, combined with this product. So it's kind of, we're doing 100% financing. So don't say that, not cheap. I don't want to say anything like that. But also we specialize on members that are overseas, due to the type of employees from the bank that are in country offices. If they want to purchase a property in the US, we can help them. The only thing that they will need to do is get a tax identification number, an ITIN number, and we will be able to qualify them based on the local currency and the assets that they have overseas. Supplemental housing, this is just a product that we offer. The blended mortgage, we explained already about the blended mortgage, and the personal lines of credit. We go up to $50,000 on the unsecured lines of credit, and you can use those also for upgrades, emergency, and overdraft, additional to the home equity line of credit that we offer. This is a little comparison of how we are matching with the big banks. On the 30 years fixed right now, we're in 6.5% versus a 6.875 that the other lenders are offering. On the 5-1 arm, we are in 5.5% versus 5.875, which is the lowest that I found, online. And there's other ones that are over 6% normally in this particular type of product. Home equities, we are between at 80%, we're in 6.75 versus 8.5% on other lenders. The blended offers average on the products that we're being closing is around 4.875. So if you have a mortgage with a credit union and you want to sell or refinance doing a cash out, maybe you're going to be between 4.5, 4.875. On that scenario, depending on how low it was your first loan with the credit union. And other big banks, they don't offer this product. This is used tailored to the IDB community. G4 flexibility, we know our G4s, so we know how this works, and we have multiple members that go outside, and some banks, they don't know how the GeForce work. So it's a little challenge for them. They come back to us because they charge them extra points or extra interest. So we need to refinance those loans, and they're going to get the best interest rates with a credit union. Loan officers help. You have a dedicated team. You have Alexandra here. We have Edwin, Eric, and Carlos, and myself, that we're here always to help you. And besides, other banks that they have normally a call center that you need to reach out, and normally it's not going to be the person that is going to be talking to you and fixing the problems, or helping you to organize the structure that you need in order to make the loans happen. Start smart. The steps are simple. Basically, go online or stop by, do a consultation with our loan officers. We're going to provide the pre-approval. If we have all the information from you at the beginning, we're going to have the same day pre-approval, 24 hours, 48 hours, depending on how fast you can provide the information. We're talking about 2 pay stubs, 2-month bank statements, copy of your IDs, G4 Social Security. If you have a contract. If not, well, we're going to do a scenario for you. We customize basically the product. We're going to help you with the fixed or ARM scenarios, and if you qualify for the blended program. And we close normally in 30 days or less. So if you need to close in 21 days, maybe we can do that scenario. It depends on the number of loans that we're closing during the bond, but you can talk with the loan officer in order to make that happen. And let's just build your future. But the final thought, this is something that I like, is the best buyers do not wait for the perfect rate. So they use the right strategy and the right lender. So we're here for you. And with that, thank you very much, and we're open for questions.
I'm going to sneak in beside you over here. I love Marco, our salesman. He always has the right quote right at the end. So I just want to say that's a lot of information, and we know that it is. But Marco and the team and Andre, they break it down for you individually so that you know and you get the right product for what you need. I honestly have to say, not because they're my colleagues, this is the best team. Andre, and when they come down, we know who you are. We know that you come from different countries. We know you have special needs. So we want to make sure that we personalize what you need to be able to go into the marketplace. And it's not just about loans. There's many other products we offer, share certificates, savings deposit products that meet your needs as well as your families. So I do want to open it up for questions. If you do have questions online, please put it in the comments. I have my little handy phone here to make sure there are any. If you have any in the room, I love that there's a big audience here. Any specific questions? Yes, I'm going to come back. Can you hear it? Perfect.
Thank you so much. This is a question for Andre. You mentioned that 41% of the properties are taking a price cut. I guess that's the national number. Do you have any breakdown for the DMV region? How is that working here?
Well, it is different for the DMV, of course, because as I mentioned before, every market is different. And there is a drastic difference between the urban condo market in Washington, D.C. versus the single family market in Virginia or Montgomery County, right? It is slightly under that number, but the numbers in Washington, D.C. are very similar to the national trend, close to 40%. In Virginia, will be somewhere in the 30s for condos and even lower for single family dwellings. Yes. Before we continue with questions, I just wanted to emphasize something that for me as a real estate broker is very important for all my G4 clients to know. Because many G4 visa holders or IDV employees do not go to the traditional banking system for their mortgages and equity lines of credit or mortgage acquisitions, right? They have no way to compare between the IDV Federal Credit Union and the traditional banking out there. I can tell you with absolute certainty, based on 27 years of selling real estate, that what you guys have here at the credit union is unique. And if you are not taking advantage of the products, of the pricing, and the service relationship that you receive, you're leaving money on the table. Many, and I'm not saying all, but many IDB employees and members do have a lot of cash or bricks and mortar in their countries of origin, but they don't have bricks and mortar in US soil. They eventually do the investment, they eventually realize it, but many, many, many years go by before they do. Why? Because the employee from, I don't know, Colombia came and met someone who is from Argentina. And it takes a little while to realize they're not going to go back to Colombia or Argentina necessarily. They want to stay here, or they decide to stay here. But it takes many years for that decision to be made. So my recommendation for all of you is that if you are in that category, to make the investment sooner rather than later. Because guess what? In cities like Washington, D.C., they're not making any more land. There is no more land available. And we have height restrictions, right? And traffic is getting worse and worse. So real estate will cost a lot more in the next decade or in 2 decades from now. So my recommendation is make the investment as soon as you can. You always buy within your means. You have tremendous support here at the credit union. So I really want you to take advantage of that. Give yourself a chance. And that's probably all I wanted to say.
Thank you, Andre. We appreciate that.
All right, I'm going to stand up again. I don't see any questions online, but any questions here in the room that you want to ask any of these professionals? Don't be shy.
Yeah.
We don't bite. No? Okay. So I think we're kind of coming towards the end. I do want to say that we do have the office hours here for the real estate agents right after Camilo's here. He's going to be here to take your private questions. I know it's a personal matter, so you can go and talk to him on a one-on-one session and get the information that you need. Also know that this is recorded, so you can go back to LinkedIn Live and take a look at the presentation and take a look at all the data that was provided to you today. We are a safe, sound, and secure organization. We can't express that enough. Your money is here, safe, here with us, especially during a time of uncertainty, right? So we want to welcome you. We want to let you know that your family members are also welcome to join the credit union, so they have the benefits of membership no matter where they are in the world. I have my colleague, my right-hand man over here, Andre Sandoval, who's here to answer your questions as well if you want to come down and speak to him in the branch. So without further ado, if you're here in the room, go get some lunch, enjoy it, and we look forward to seeing you again soon. Thank you, everyone.
Thank you.
Gracias.